All right, guys, it's Paul Singh, the market speculator, with the weekly swing trade report at Bulls on Wall Street for Saturday, July 23rd, getting ready for the week of July 25th. Let's start off with our usual market analysis here. We're going to look at the overall bearish topping pattern that we've been talking about for a while now, but something key happened today. Actually, two different things here. One, we've got a 50-day moving average remount, which is the first big hurdle we've made, and an improved T2108. That's an indicator on TC2000 that measures stocks above their 40-day moving averages. Let's go ahead and take a look at the chart here. You can see here, essentially, we've had a downtrend. Every bounce has sold off, making a lower low and lower highs. So we want that trend to change. It has not yet. But what is key is we remounted the 50-day moving average. Now, that's the first step. It doesn't mean any trends are over. As you can see here, back in March, we did remount that level and then failed. So here now, we did clear that level, but it doesn't mean all systems are clear. If we get back here next week and start to break below this level, essentially we're setting up for the next leg down. Obviously, if we're bullish, we don't want to see that. So what we want to see is some strength here. If not, we wouldn't hesitate to start establishing shorts. But I think we think about risk reward a little better to the upside right now. So that's why we're kind of rooting for the bullish play, but we'll do whatever comes our way. And then the other thing we'd like to see here, if this thing starts to run, we start to develop a higher low here, which I wouldn't count as a higher low yet because we don't really know what this is going to do. But if we can clear this peak here, then we could say this is a higher low and we would have a higher high. That starts to change the trend here. And then if we get up over the 200-day moving average and the 50-day starts to curl up, which it would, it's in a downtrend now, that would change the trend. We'd be out of topping pattern and essentially thinking that we're back on uptrend in the overall grand scheme of things here. So that's the analysis here for SPY. If we look at the other two indexes we watch closely, the Qs, which is more tech heavy, essentially we're seeing something very similar, and then same goes for IWM, which is small caps. So that's essentially our market analysis here. The other development here, since we talked last time, T2108, very strong. If we thought about where is price action is down here. You can see, if we look at SPY is down near the lows, bouncing off the lows, but still near the lows, where T2108 is actually showing a lot of relative strength, somewhat of a positive divergence here. Where price action is, we would expect a T2108 to be right here. We'd be happy if it was up here, but it's actually nearing, going back to 2021 highs, and the market was way up here at that point. So again, this is stocks above their 40-day moving averages. This is a good overall sign of strength in the pattern we're seeing. So that's what we want to see. We are seeing that. So there are definitely two positives we have right now. Remount of that 50-day moving average, improved T2108. I've got the wrong ticker here. It's T2108. But remember, we are still in the midst of the overall bearish topping pattern. The trend hasn't changed. We haven't made any higher highs or higher lows yet. Okay, so that's our market analysis. It helps us kind of set up how we're looking at the week ahead. And we have two big things coming this week. One, we've started earnings season. We've had some companies report now, but now it really gets going. This week, all of the FANGs are going to be reporting. That is Facebook, or now Netflix, Apple, Amazon. Netflix has already reported, Google, and then we also have Microsoft reporting as well. So a huge week for tech that could set up some trends. So we're going to watch how these guys react to earnings. We're going to look at what they say about guidance. We're going to see what the price action does. That's going to be a very good market tell. So far, three of the big ones we've had are Tesla, Netflix, and Snapchat. We've had good reactions in Tesla and Netflix. Let's just go ahead and take a look at that. Tesla did have some mixed earnings, but the price reaction was good. It was up 10% on this day, continued on Friday, and we'll see if it can back up. I don't think it's a trade yet until it gets back up over the 200-day moving average, but very much improved. Netflix has been getting crushed, posted some good news. This sounds very odd that losing 1 million subscribers is good news, but they were expected to lose 2 million. And you can see nice bounce in Netflix. This might have made a low here. You can see the line I've drawn here. We're watching this line very closely for a potential move into the gap, and then we could target the top of the gap range. So we're watching Netflix very closely, beaten down stock that has some momentum right now. And then, of course, Friday, Snapchat, horrible earnings. The entire market was watching this, not necessarily because it's Snapchat, but because it was the first big media, social media company relied on advertising and not subscribers. In terms of Netflix page subscribers here, Snapchat is relying on advertising, and their numbers were really bad and their guidance was really bad. And that was a bad signal. But this earnings season, we're probably going to see a lot of these reactions, and we'll wait and see what the FANG stocks say now and see how that goes. So we've had a little bit of a mixed bag with the few earnings we've had so far, but we're going to get some clarity next week. Then also the Fed, big Fed next week, as all of them seem to be now. We're going to look for two things. One, do they raise 75 basis points or 100? I think the market, I know the market expects 75. So I don't think a whole lot's going to happen with 75. 100 could send the market failing. So we're going to watch that closely. And then what is their guidance? They could only raise 75, but if their guidance, if Powell starts talking and the market doesn't like what he says, we could see a decline there. So we're going to watch very closely to how the market reacts to Fed Day. So again, big earnings week, big Fed Day. So this is going to be a huge week for the market. Let's do some industry analysis. Two areas we're looking at very closely. One is growth. And for growth, we'll look at two ETFs. One is IGV, software. And you can see here, still got the bottom formation we've been talking about for a while now, but no breakout yet. But definitely we should have a list of stocks from software, which we do. And then we can also look at the ARK ETF, which is going to have a lot of software and some other stocks as well. And you can see here, bottom formation still intact, money flow still strong, but no breakout yet. And that's what we're waiting for. And then surprisingly here, considering all of the housing and real estate news, housing stocks have been doing really well after being crushed here. So nice reflex bounce, hitting resistance now. And you can see here, Friday did not want to break through and pulled back in here. We'll see, does that signal a pullback in here, or is it going to break out of this range? So I think this is definitely an area we should be watching at this point. Now our weekly focus list. I'm going to stick to the relative strength right now. Growth stocks, if you want to look at growth stocks, just pull up IGV and look at some of the stocks in here, and you can do the same for ARK. But our relative strength stocks, we've got CellH, we've been watching, pulled back yesterday. But you can see here nearing highs in beverages, also Monster. Here we're watching for a break of the all-time high, which could really set up a big run here. This will be the third big attempt since it made its all-time high here back in early 2021. So we're watching this one closely. It does have earnings in a few weeks here. Maybe that'll be the catalyst to get it up over there. Costco was getting hit here, but has come back strong and is actually nearing highs now. And already over its 200-day moving average, which the market is not. So relative strength here. I don't know if it's trade right now, but definitely worth watching. And then Alta has shown a lot of relative strength through 2022. If you look at it this way, at the start of the 22, it was here, essentially a straight line or up a little bit, whereas the market and a lot of stocks have done this. So showing a lot of relative strength, held up through all this. Now maybe it's ready to break this range in here. So we're watching Alta very closely. All right, guys. Remember, you can join bullsonwallstreet.com. We have the swing report every day. Otherwise, next week, I will either put one of these videos out or we'll do a Stocks and Coffee, which is a live session.